Okay, everyone, welcome to this new webinar. This is a Q&A webinar. As you know, you will be able to ask any questions. You can ask me to go over any asset, stock, forex, index, ETF, whatever. And I'm not doing any horoscope, so I just can't do that kind of analysis. But other than that, I can do anything. Okay. So, okay, good. Remember, this is a trading disclaimer. You can pause the video and read it at any time. What we're going to do today here is going over lots of stocks, forex, cross pairs, anything, so that we can put all the rules into context, or at least the majority of them. Hello, Mohani. Okay, so there is a request from Lars to go over NOK yen. You said that one? I believe so. NOK yen. Okay. So we're going to do that one first. Good. The first one on the list. Hello, Petros. So over here, okay, NOK yen. This is a bullish pink candle. Let me do that. Let me do this. I believe IDC should have a lot of more data. Well, more or less the same. So we're going to start. He wants me to do the analysis on the monthly, weekly, and daily, the monthly sequence. So we're going to start from here. Okay. So here on the NOK yen, what is the trend on the monthly right now? Can anybody tell me? Is it down? Is it up? What is it? Lars, you are the one who asked about it. Up. Why? Why Jose and Lars? Why up? Aussie Yen entered the daily supply but invalidated 4-hour supply. What to do now? Okay, I will add the Aussie Yen, next one on the list. Okay, let me finish with the NOK Yen first. Okay, is that good? Okay, good. So bearish consolidation. Well, we've got up, bearish consolidation. Well, let's see. All-time lows. Okay, this is all-time lows. The bearish impulse that ended up breaking the all-time lows, isn't it this one? That bearish impulse? So the origin right there at the top, which is the peak, that should be the supply zone. So that's the supply zone. We've got supply in control. That was tested there. That could have been a valid area of supply over there to go short at. But now, as you can see, we've got prices rallying again and testing deeper the imbalance because it's been tested already. We cannot set and forget. Okay, so we need confirmation in order to go long. And we've got an attack with a bullish engulfing pattern. So going short right now, if you were thinking about that on the monthly sequence, Lars, it is prohibited. So what is the trend? So we've got, isn't this one peak? And then the next one, the previous one, isn't it that one? It is not this one. That is the third peak. So first one, second one. So we connect both. So what do we have right now, my friend? Two candles closing fully above the trend line. And that means what? It is not a downtrend. It is not an uptrend. Out of alignment, Damian, correct. So it's what Year said and Mohani said. Okay, so we've got these two candles. So the origin of that move is that valley. So we've got a brand new area of demand. Why? Because we've got one candle and two candles consolidating away above the trend line. These candles are not intersecting with the trend line, so we consider both of them, as you can see, closing away above, not touching the trend line. That means that the trend line is broken and the downtrend is no longer valid. It is broken. We have bearish consolidation. We do not have an uptrend like Lars and Jose and Anwar said. Why? Because in order to have an uptrend, what do we need, Anwar? And Jose Fernandez as well. They both said up, and also Lars. What do we need in order to have an uptrend? exactly elimination of a supply zone, opposing an imbalance taken out. So we've got an uptrend is made of a valley or swing low, another valley or swing low with the lows higher. So we can connect a trend line. That's potentially an uptrend, but in order to consider an uptrend trading supply and demand imbalances, we need an opposing imbalance, in this case supply, because we have bullish valleys and swing lows, okay? We need an opposing imbalance eliminated. But if that happens, then we consider that the trend has reversed and we have an uptrend instead of a downtrend. But in order for that to happen, we need that tested supply zone eliminated. It's not, well, of that valley, yeah, I mean, that valley, yes. I mean, it's not here. Okay, we could have here, okay, this is the valley over there. Okay? So that's what we have. If that area of supply is eliminated, then we might, we will have this area tradable. And what happens here? What happens if we have this candlestick there closing there like that at the end of the week, which is the end of the month, January 2021. So that means that next month we might have another ERC, maybe, and next month another one over there, and then we would consider that the impulse or the basic structure followed by the impulse responsible for eliminating that one. If it continues to rally higher, then this will be the one. Okay, so this is potential demand. This is a basic structure right now, but we still need 3 days. I don't think this is going to rally and break that area of supply in just one day, I believe. Today is the 28th, Thursday 28th, and the 31st will be, let me look up the calendar, it will be Saturday maybe, Zach? 31st January will be, yes, Sunday. So the 1st February, it's just 1 day and a half left for this supply to be eliminated. So I don't think this is going to happen in just 1 day and a half. It might, but it's not probable. Okay, so the trend will be considered an uptrend. Okay, and I will do like that always. The dotted line, I will change it to thick line like that. If that happens, then I will consider the uptrend, and then I will eliminate that one, and that's what we're gonna have, an uptrend. So right now, shorts are not allowed, Lars. Why? Because the level was tested, it was under attack. Okay, and what else would have prevented you from going short over there without looking at any other time frames right now? Anyone? Let me now do this so we can see more time frames. So what else do you see that should prevent you from taking set and forget? Or maybe expecting something, or expecting this area of supply to be eliminated? Anyone? So since you are not saying anything, just look. Pins on the 3 months. Brian, yeah. Petras, 3 months. Not able to consolidate away, which is also not good for shorts. So, and then look at the pink candle, So that's not good for set and forget. Okay. And then you have the bullish engulfing pattern. Then now you have the bearish consolidation. So if you've got lots of things going on that should sort of warn you or prevent you from taking short at this imbalance. Okay, we've got engulfing patterns, another engulfing pattern, pink candles, 3 months bearish impulse, not able to consolidate away, tested supply, expecting bigger penetration, bullish engulfing pattern. So there are so many hints. The price action on many other timeframes are telling you, hey, even though the month is in a downtrend, monthly supply is in control, stay away from shorts. Make sense, Lars? We are allowed to go long aggressively at new areas of demand, like this one over here. Okay, that one was overshot, was made like 2-to-1 overshot. The stop loss should be underneath 25%. So maybe we could have a new area of demand on the 4-hour. Creative continues to rally. Okay, still long on the trade. Okay, good. So it could continue to rally and eliminate that area. If I was trading stocks and you were trading options where you only buy time, you don't care about this area to being eliminated. You know this is a long-term thing and this is going to happen maybe this week, maybe in 2 weeks time, maybe in a month time. As long as you buy enough time, you don't care about stop loss and all that. And that's the beauty of options. But if you are trying to sort of hit the target every single time in a little tiny area like this one, then many times you will have that happening. Okay, that's the problem when you trade spot, forex and all that. That's the big difference. Okay, so are all your doubts solved, Lars? You were the one who asked about NOK Yen analysis. Okay, great, Lars. So I'm gonna go to Aussie Yen now because somebody said something about this one. Who was it? Aussie Yen, Marcio. Enter in a daily supply zone, but invalidated the 4-hour supply. What to do now? I mean, you mean that you were short on Aussie Yen, Marcio? Short, why? Isn't the monthly in an uptrend? Isn't the weekly in an uptrend? So shorts. Okay, but you said that you were, okay, good. But it doesn't matter if you are starting or not. I mean, you said that you are going short with the weekly in an uptrend and the monthly in an uptrend. So going short is not allowed. Makes sense. That's why supply is not holding. It's being eliminated. Makes sense. You wanted to go long now. Well, you need new areas of demand. We've got that area of demand already in control on the daily. And there is a strong bullish candle over there. So maybe on the 4-hour, we are having new areas of demand being created. That could be potential area of demand over there. Make sense? Marcio? So only longs are allowed. We've got a very similar scenario. If you compare NOK Yen, remember the 3 months bearish impulse that was not able to consolidate away? Okay, so let's switch. See? No consolidation away. So on Aussie Yen, which is a very highly correlated cross pair because Yen is on the right side of the cross pair. So we can see that this bearish impulse did not consolidate away. It was eliminated. We've got the pink candles as well. Okay, so the same thing is going on NOK Yen. Pink candles, 3 months bearish engulfing pattern not able to consolidate away. So that is telling us, well, it's just confirming if you want to add, let's say, correlation, then Aussie Yen, which is also a Yen cross pairs, is telling you, hey, do not go short over here. And maybe we added CAD Yen. I'm just thinking out loud. Okay, what do we see on CAD Yen? Okay, same thing, isn't it? CAD Yen, 3 months bearish impulse, not able to consolidate away. Same thing on NOK Yen and Aussie Yen. On Aussie Yen, these bearish impulses being eliminated. On NOK Yen, that it's probably going to happen in the next 2 weeks. And on CAD Yen, maybe it's going to take a month or two, but that is going to happen as well. Make sense? Any questions about this? Anyone has something to analyze before I proceed and go over these ones on the list? Any doubt? Anything you're struggling with? Okay, Diego, tell me. Okay, Diego, in the stock channel, at some levels with CPs, you took a wider zone than the CP itself, except monthly demand in AC HC. So monthly, you mean this one? Why are the bullish candle to the level? I mean, what do you mean? You're talking about this, or you're talking about this? You can, I believe you can annotate. You mean, why did I draw it like that? Or why did I draw it like that? Like this, exactly. Why did I do it like that? I mean, do you have a microphone there, Diego? You can talk. I can unmute you and you can talk. You have the microphone? So we can talk about this one. It will be better. Just let me know if you have a microphone. Okay, good. Diego?
Yes, hi, can you hear me?
Yes, I can hear you.
So I was wondering why the CP, what you have drawn now, is the CP as I would have drawn it like that way. In the stock channel, you took the green bullish candle to the left, yes, like that. And I was wondering why you did it like that in this particular...
Because many times you will see the price reaches these areas like that. This is like, as you can see, let me zoom in a little bit. You will see. When we zoom in, as you can see, this is like the mother candle. You can see here, this is the high. And all these candles on the right are closing below that high, you see? So I've seen this scenario so many times. I mean, you will see something like that. You think this is going to play out, and then price does like this, and then rallies again. Okay? So it is, I mean, it doesn't really matter how you draw it as long as you are protected. But the thing is, if you are buying the underlying shares and you want to protect it, obviously you will stop. If you draw the level like this and you calculate the amount of risk that you can take, then it will differ from a level which is much wider. Okay? But the thing is that you need to pay attention to this kind of price action, because many times, well, with all with what's going on in the stock markets, where there are pre-market, post-market, gaps up, gaps down, all that kind of volatility, this could happen, but still this could hold. And not only that, but this is a basing structure as well on the 3 months that could become an area of demand. So that is nested at the proximal line. Makes sense? So it doesn't really matter. I mean, once price is over here, very close, obviously if you are going short intraday or short term, forget about it. I mean, when price reaches that area and you start seeing something like this, imagine price drops to the monthly area of demand, and then price continues to drop, and it goes like this. And then you say, well, I've lost because I placed my stop loss underneath and all that. And then suddenly you start seeing this price action. Just imagine, copy and paste this right here. Okay? What would you think about it if you start seeing this? Exactly. And the month is in an uptrend, and this could be confirmed as a 3-month area of demand. Probably, depending on when it happens, that would also be a 6-month area of demand. So we would have a lot of confluences to go long. Make sense? So trying to place a stop, it's like having, like I always say, you've got here you've got like a target. Okay? Imagine you are throwing arrows. This is a target. Okay? So trying to trade, imagine here. This probably will be an every man. I don't know exactly. Okay. Yeah. This all-time highs. No, supply is here. Demand is there. Okay, good. So this is demand. So imagine this. It's an area of demand nested at proximal line. So probably price will not do this. It will stop right there because it's a strong area of demand made of several ERCs nested at the proximal line of this CP. Make sense? Probably that won't happen. If price action was like this, instead of like this, then price will probably do like that. Okay, so if price drops down there and you are doubting about going long there, wait for price action to show you, to prove that price is ready to bounce back up. Okay, so the thing is, if you do it like that, obviously, and you are planning to go long, there, stop loss should be there. That's a lot of risk. So maybe you would have to do like that, okay, or maybe like that, or you take the risk and you do it like that. So I would prefer always to go for the more conservative approach like that. So what I was saying before, we've got a target like that. You are throwing arrows at it. So the bigger, so what do you think you're going to have more success at? Hitting the exterior of the target or the center of the target? What do you think? Yeah, if you, are you very good at it at this? I believe I am. Yeah, but yeah, here over there, no? Maybe the public watching you, you are hitting the public. So the audience. So the thing is, I believe I'm very good at this, but still I prefer to hit the exterior. I mean, and I believe I'm very good at trading supply and demand, but I'm not, my mission is not to hit the target. My mission is, I mean, the center of the target. My mission is to hit the target. It doesn't, I don't care where, I want to hit the target. So if the target is like this, okay, I'm not hitting the center. I'm not aiming at the center. I'm aiming at the outskirts, like the exterior. Okay, sometimes the level will be tiny and then I will be in luck, let's say, and I will hit the target, the center of the target. But I'm just aiming at the exterior because I know that I will have much better chances if I draw the level wider, and once price is inside, you can do two things. This is a certain focal level. Yes, it is. But if you are in doubt, just wait for bullish price action. Make sense? Just wait. I mean, yeah, yeah, that's it. I mean, I believe you are the one drawing many times daily imbalances that are not too high score, isn't it? You, yeah, because I remember that I said to you the other day, every time you share a chart, the daily imbalance is very, very low score. So it's, I mean, wouldn't you prefer to lean on imbalances like that? That's what I want. And if you look at the stock channel, you're going to see so many like this. Sometimes it will not retrace. So right now we think that we're going to be missing this one. Okay, GameStop. Okay, GameStop went to, some of you, I think Cerro, one username, I believe he's from Norway somewhere in the north. And he was talking about this one when price was over there and then there and there and there and there. I mean, well, he's talking about this one, but are you going to go long on this one? Because volatility on this one is crazy. And I said, well, the bigger the rally, the stronger the rally, the stronger the drop. It's tanking here. Almost, it reached the area of demand on the daily. So am I going to trade this one over here? I'm not trading this one. I'm just waiting patiently because I want to trade down there at the early end move. I want to wait for the weekly to consolidate away. So do you want to trade with this price action? I'm not trading without price action. I believe GME went like 100% the other day or 50%, and today went down 35%, which is crazy. Who's going to trade that? I'm not trading that, okay? But the thing is, the bigger and the wider the level, the better. And if you are uncomfortable with it, just wait for bullish price action to be formed, okay? And then plan your trade. Make sense? And like Anwar said, I mean, this is the game of waiting. You just have to wait and wait and wait. Monica said something. GameStop was a Reddit user's manipulation. Sad to say. Well, yeah, I read about that today. Somebody mentioned in the community. I'm just not following anything, so I don't need to know or that it was a manipulation by Reddit users and all that. I just see strong rally and supply and demand. The rules tell us after a very strong rally, you have to wait for what? For a bigger retracement. And that's what I'm doing. I'm just waiting. I don't care what manipulation it is or not. Make sense? Yeah, okay. Adrian, who is your broker again? Interactive Brokers. Adrian, Interactive Brokers. Any other questions? Daniel? Diego, sorry. Any other question? Well, I think he's gone. Or maybe he's got a problem with... Okay. No worry. So, any other questions about this? We were analyzing ACHC, I believe. Yeah. So, and then I jumped right to GME. I wanted to go over it. So, I wanted to go over BlackBerry as well. I used to have one of those phones many years ago, but now I don't have it anymore. Well, okay. Good. So now that you are there, Diego, what can you tell me about BlackBerry?
Well, in the long term, price seems to have retraced to the strong longer term demand zones in the 12 months at least.
Yeah.
And then it's bouncing back from that, and now there is in the last few days there is a lot of volatility.
Yeah, there is a lot. This is very similar price action to GME. Okay, very, very similar. Okay, so
AMC is very interesting today. You added, I think it was dropping 60%.
which one?
AMC.
MC. Wow, this is crazy. Is this another manipulation? Looks like price action looks like the same. Okay. Yeah, Monica said yes. That's the another one from Reddit users. Crazy. So well, it doesn't really matter. This is all-time lows on AMC. We've got bullish price action. This bearish impulse again was not able to consolidate away. So going short, not allowed. Again, the rules. So if on February we've got another candle over there, consolidation away, then we're going to have demand over there. We already have demand on the weekly, and we've got confluence, strong confluence, so and very cheap price. It's that level is like a $4 per share. So going long here is the way to go. Going long there, not allowed. It's just crazy. If price goes up so strongly, it made like from here to there. How much was it? From there to there was like how much? 420%. Crazy. After a rally of 420%, you just cannot buy it. You have to wait for a big retracement. So if you are buying over there, then probably, and then if you buy, probably the spreads will be so wide that when you want to close it, you're going to lose a lot of money closing it, if you can close it. Okay, that happens many times. So let me read Monica. There was 5 stocks: GMC, AMC, EXPR. Okay, BB. Why? Better Bath and Beyond. Crazy. And which one? And BB, BlackBerry. Okay, good. Perfect. So, but this is good because the origin of the move, this is like having a COVID. This is the trigger we need. So that's where we could be thinking of going long or at the origin of the move. So that's great, but we need to wait. Probably volatility on these stocks is super, super strong. So going long right now is just not possible. You shouldn't be. And if you are buying options, and the implied volatility will be like the rank, the IB rank will be like maybe at 800. Well, let me check it out. I believe I have Thinkorswim over here. Let me check it out. BBBY. So look at that. Volatility is like 100% and now it's dropping. So that's not good. Why? Because when you buy, for example, options, if you buy options and the option, let's say for the sake of simplicity, that the option costs you $100 per contract. So when the implied volatility, when price is over there and you want, let's say, I'm going to buy intraday or whatever, or when price drops down there, if the volatility is so high and price doesn't move, but the volatility goes down, then the price of the option will go down. Like if you buy at 100, it will go down to 90. Okay, this is volatility rank, as we saw before. So it is very high, so price starts dropping, and imagine the price is right there at the weekly area of demand. So it costs you $90 per contract, okay? And then the volatility starts to go down, and then the premium that you paid goes down, and then you are losing money without price moving higher. So you need to wait for that volatility to disappear, okay? Let me show you. So we need volatility like this. Make sense, Diego? At the bottom. Because if you buy the options here, I mean, imagine you buying here, this is by the ask price. So probably in a couple of weeks, it will not cost $8. Imagine if the price is down there. I mean, you can test that with Thinkswim over here. And you can see how the price of the options go down as volatility goes down, and then price doesn't move from the area of imbalance, and you are losing money without price moving at all. So you have to pay close attention to volatility. So right now, volatility is super high. This is good to buy, like AMC, BlackBerry, and all those, but it is not the right moment. You need to wait. As simple as that. Okay, good? Good, okay. Any other question?
Well, now that you mentioned options, I was wondering, going to share some sources about that?
In the future, yes, I'm thinking how I'm gonna do it. When I launch the new website, I'm gonna be making a lot of changes on the new website, how we're going to proceed and all that, but I need to make up my mind. So I haven't made it up yet, but you will all know. But it will not be very complex. I mean, I've been receiving some emails from members, and they're showing me, what do you think about in the money, bullish spreads, buying this stock and that stock? And I say, what? I'm not doing that. I mean, why am I going to cap my profit? I just buy calls at demand, and I buy puts at supply. As simple as that. It can't be simpler than that. You want to add all kind of option strategies like iron condors, butterflies, broken wings, and all that. I mean, it's like, I don't know, heterosexual wings and all that, those fancy names. It's like, who invented those names? I mean, it's just crazy. So I just want to buy at demand, buy and sell at supply. What is a sell? What is selling a supply? It's buying a put. And that's it. I just buy as much time as I want or as I need. And that's it. Very simple. Jai Musa was just going to ask about in the money versus out of the money. So, I mean, there are hundreds, if not thousands, of option courses on the internet, Jai Musa. And I believe all of them, the basics, are very, very good ones. The ones from Tasty Trades or even from Investopedia. But just focus on long calls and long puts. Learn a little bit about the Greeks, delta, what delta is all about, and all that, the time, intrinsic, extrinsic values, and all that. And that's it. That's all you need to know. Nothing else. Anything other than that is overcomplicated, what is already super complicated. Okay? So, BlackBerry. It's not BlackBerry. Bed Bath & Beyond. So, longs could be possible over there. Looking good right now. If we get that candle consolidating away, we've got the engulfing pattern as confluence, and great. That's what we're going to do. So Lars, if you buy an option at the weekly demand, how many months expiration do you choose usually? I buy as much time as I can. I mean, it will depend on the top-down analysis, Lars, but minimum, I'm buying minimum 150 days, minimum. Okay, I don't care if it is more expensive or not. I just buy it because it happens many times. How many times? Let me ask you, anyone, okay, and Diego as well, who is now talking to me. So imagine we've got a weekly area of demand over there. How many times have you seen price do like that and stay here for weeks before rallying, and then it rallies a little bit and then goes down again, and like that? How many times have you seen that? Imagine this is not a weekly time frame, it's a monthly time frame. So it's very often. So if you buy, let's say, I'm going to buy a month of time. I mean, if you are talking about intraday, Forex intraday, staying in a trade for a month is like, what? That's sacrilege. I mean, how can you stay long on a euro dollar for a month? That's crazy. I mean, I am an intraday trader. At 5 p.m. every day, I'll close all my trades. I don't want to hold overnight. But if you are buying options, I mean, the closest options you can buy is the weeklies. Well, on some ETFs, SPY and all that, I believe there are daily options. I read about it. I just can't trade ETFs, so I'm not looking at them. Maybe somebody else like Monica and others will confirm that there are smaller expiration dates for those ETFs. I'm not allowed as a European citizen to trade ETFs. So if that can happen, so if you buy 1 week of time, you lose. Okay, it could happen that you've got a weekly air demand, and then in a week you see this. But does these kind of price action happen most of the time, Lars? Brian said just weeklies. Yeah, thank you. Does this kind of price action happen most of the time, Lars, or anyone? Diego? No, it doesn't. You never know, but this kind of bullish price action, you are telling me that this is like ready users manipulation. Okay, so this is manipulation. This is not happening in a normal market scenario. I mean, it doesn't happen like that. So usually when an imbalance on the weekly or any time frame is reached, that you're going to have, regardless of the time frame of this imbalance, usually price drops down there and stays down there for a few candles. Okay, so this candle could be 1 hour, 1 day, 1 week, or a monthly candle. It doesn't really matter. This imbalance is the time frame of this imbalance is irrelevant. So if you want to buy, if you buy the underlying shares, you just don't care. You've got a cash account and this costs you $10,000. Okay, I want to buy and hold. You don't really care. But if you buy time, you do care. Because if you buy 1 month of time and price stays there 4 weeks, you lose all your money. As simple as that. So the more money you buy, the better. Make sense? Lars? So, for example, let's take a look, I don't know. Let's take a look at, I don't know, which one? ACB, for example, Aurora Cannabis. Okay, I'm long on this one again. I took this long over there, exited there. Why did I exit there? I mean, it reached my target. I mean, got an email from IB, your trade has been closed. Okay, good, perfect, in no time. And then now I'm long again. I bought, how much time do you think I purchased? Purchased 2 years of time. 2 years. I'm not gonna fail on this one. Maybe I will, but buying 2 years of time. So do you think that in 2 years of time price can reach this area? This price area? Probably yes, or even higher. So that's the beauty of options. As simple as that. So do I need now to buy an iron condor, a broken butterfly? I don't know. No, I don't. I don't need to do that. I just buy options, calls, and that's it. I buy time. Betty, what do you think about this price action? Diego or anyone? Here. What do you think? It's not doing much. So remember, we've got a very big time frame imbalance in control. And we're having this bullish price action. Once this high is broken, I don't think nothing's going to stop ACB, okay, from rallying minimum to 50, 60, or even higher. How long will it take? I have no idea at all. No idea. So since I have no idea, I buy 2 years of time. Very simple. 1 year of time. Okay, 1 year of time. Consolidation, what do you mean? Jay Moores, I'm not sure, but I believe that I bought it right over there, more or less. Since I am, let me ask you, everyone here. So this is options is very complex, but let me ask you one thing, and you will understand very, very simple. If I am buying, if this was Forex and you buy there, don't you think price could go down there to this bullish of a pattern, or even to the origin and move to that weekly every month? Don't you think that could happen? Make sense? Anyone? You too as well, Diego? That could happen, isn't it? So you place the trade here. Imagine this is demand, okay? And then you place the trade there, and the stop loss over there, price does like that, and then suddenly drops 30%. You lose, okay? Yeah. But I mean, you have a loss. That's it. But I am not buying the underlying stock. I am buying 2 years of time. Do you think I care about this impulse on the daily when I have bought 700, okay, or how much is 300 or 365 multiplied by 2 is like 730 days of time. I've bought 738 daily candles like this. Do you think I care about 3? I don't care about that. So I just buy time. And how much is it? Let me go to ACB, 2 years of time. So it depends on when you buy here. I mean, 1 year of time. Let's say you buy here, okay, at the strike price of 10. It costs you, let's say, for the sake of simplicity, we don't do the mid price, $500 per contract. If you buy 1 more year of time, this is 21st January 2022. If you buy 1 more year, it will cost you $595, $95 more. Aren't you going to pay $95 more to have 1 more year of having success? At this trade, that's what I'm doing, my friend.
Can I ask you, before you were trading with stop loss and take profit only, right? On cash or margin, right?
Yep.
And then you started trading options. So apart from this, what were the main reasons why you stopped stop loss and take profit and switch to options? Apart from I think a higher success maybe,
But isn't it obvious what I just said? When you buy a level, any level, yeah, well, many things. When you imagine this, okay? Imagine, that's for the sake of simplicity, okay? This is a level of demand here. Imagine, okay? This is a level of demand over there. So I buy there, whatever risk I take, 1%, 2%, whatever. I buy there. So if I buy there, my stop loss should be around there, 25%. It's not exact, okay? So the thing is, okay, I buy there and then I might have a loss or not. If I buy time, and first of all, there is no stop loss. The second important thing is that when price goes underneath, you might have like a mental stop loss or mental stop loss. You set an alert. If price goes underneath, I'm out of the trade. The beauty about buying time and options is that if this costs you $500 to enter and you think price is reversing, when price is down there, you are not losing the full amount. Maybe you will be losing 30% or 40% of the trade, of the risk that you used to enter the trade. What happens if you buy the underlying share and you are risking 1% and you are risking $500? You lose the $500, 100%. But here, if price reaches that area and you close the trade, there are many variables that will influence the value of the option. But let's say instead of 500, my option could cost like 250. So if I enter trades using 1% risk and I want to exit at 3 times the risk, every time I on Forex and the cash market, every time I lose 1% or more. When I buy options, if I risk 1%, every time I lose, I might not lose 1%. I probably lose 0.5%. So if you want to, if you've got like the 3-to-1 reward risk, I exit at 3%, 3 times the risk, and I lose at 1%. It means that when trading options, you might say that you are not losing every time. I mean, unless you hold anti-expiration, you will, obviously. But you might say that every time you lose half, or maybe a little bit more or a little bit less. It depends on what you do. Okay? So that gives you even more odds, because every time you lose is not a loss after a full loss. You know what I mean? It's not a full loss because you still have time. If I bought here, like, let's say 1 month of time on that daily level, and price has gone down here in 2 days of time, I still have 28 days left. That is time, that is value, that is money, that you can get it back, part of it, okay, depending on many variables. But that's another thing, okay? Brian said, half of the option zones are actually broken, and then time works for me. Great. Jai Moores, after trading both, I must admit, I feel like options are the best of choice. Good. Lars, is it possible with options to place a target at a certain stock price? Yes. With Interactive Brokers, and I believe with any other broker, you could say, I buy 2 months, 2 years of time, and when price reaches $24, send an order. You can automate that. Sell to close, my buy call, my long call, sell to close, not sell to open, sell to close. And then you exit at whatever value the option is at that precise moment. As simple as that. Okay? Or you can just say 70, 60, 50, or whatever. Or you can say, okay, I bought it and the option cost me $100. So close it when it reaches $400. So IB, or the broker, is monitoring the value of your option or your asset, and when it reaches $400, it will send an order, sell to close, a market order, and then you will exit the trade, and you will get an email on your inbox saying, hey, sell to close on ACB has been reached, whatever, how much did you want? Yeah, well, usually it won't be 3 times or 4 times, it will be less because of the spread, and since you are buying or selling, closing the trade to the market with market price, not at mid price, so probably you're going to be paying much more than it's worth, but well, more or less. Okay, make sense? Okay, so it's very simple. You don't need, but then there are many variables you need to pay attention to, but you don't need those complex, fancy names that option strategies have. It's like crazy. I mean, I've seen so many videos in the beginning trying to understand options. It took me some time to understand options. And I watched so many videos trying to understand what people were doing, and all of them have got the reward risk reversed. I mean, they are risking sometimes 8 times. I mean, they've got, instead of saying, okay, what would you prefer? To risk 1 to exit at 4, 5, or 8%? Wouldn't you want that? Yes, I want that. But most of those doing like spreads and all that, they would usually do non-directional trading, which is crazy. Non-directional. Most option traders and educators say directional trading is crap, bullshit. Okay, that's what they say. Well, they say that. Why do you think they say that? Because they are using mathematical formulas with volatility and all that in order to plan their trades. So since they don't know where they have to buy, I know how to buy. So now this is directional trading with the 12 months. So I know where to buy. I don't need to use any formula or any fancy option strategy names in order to plan my trade. So this guy will do something like on stocks like, I don't know, big ones like Adobe. I've been doing this. I've been testing this for a long time. And I had a pretty, I mean, I've been testing a strategy where I was using bullish and bearish spreads, using imbalances and all that. And I took like maybe 30, 35 trades in a period of probably 3-4 months. And I won on every single one of them. That doesn't mean it's going to work always. Let me explain to you. So what these guys will do, or what we would do, it's say, imagine that this is an imbalance, okay, which it is, okay. You can have a strategy where you buy here, right there, that far, or even farther, and protect it over there with a sell. Well, okay, like there. You can buy there, spread like this, there. So, and you would be buying like 2 weeks of time. Do you think that in 2 weeks of time, price could get to the proximal line here, to the upper, the sell call? Well, probably not. But when it does, you're going to lose a lot of money. A lot of money. And when I mean a lot, it's a lot of money. So when you do this, for every single contract that you buy here, you usually get for 2 weeks between 15 and 25. If you are lucky and the premium is inflated with volatility, $30 per contract, per spread. So you buy here, okay? This is a spread right there, so far away. So, but in order to get that kind of money, okay, with Adobe, for example, you're gonna have to use strike prices of $5 or even $10. So every single trade that you take, every single contract, you're gonna be, okay, risking $500 in order to get how much? $30 out of it. So minus the commissions, okay? So you could say, okay, I'm not risking $500 for $30. Well, most people do. That's what I see everyone doing. So they're not going to risk 500. Why? Because I wouldn't risk that. But I've been doing that. I created an account that was called this, like that, $5,000. Okay, $5,000, and I risk $5,000 on every single type of trade, on every single trade like this. Okay, and I won on all of them. But sometimes price dig like that, and when that happens, you are losing $2,000, $3,000, $4,000, as long as price does not end underneath this strike price here, the proximal strike price, which is the sell, the sold option. Okay. That's very, very, very risky. I have done it because I needed to test it, okay? And I needed to know what these guys are doing and why they are doing it. Why can they do this? Because on stocks like Adobe and many others like Tesla and many futures and all that, there is a lot of liquidity very far away, very far out of the money. There is a lot of liquidity here. So if you go to Adobe, for example, I used to trade this one a lot, and you want to buy or to do a spread for 2 weeks, this one on February, I'm going to use, show all this, all the strike prices. You will see there is here, where is it? Open interest. There is open interest. Where? Look at that. 385. That means 385, 300, 395. So let's see where that price is. Look at that. There is liquidity right there, what I just said. So people, they will do that. They will create spreads like that, risking like 10% of their account to get 1%. So the reward risk is inverted. This is the risk and this is the reward. By buying a call here, okay, you get risk 1, reward unlimited. So which one do you prefer? Anyone? I do prefer this one. Unlimited reward, unlimited, quote unquote, unlimited. It's not unlimited. Okay, but there is your profit is not capped. Okay, so why would I buy, spread here, an iron condor, or what, a ratio spread and all that? I don't need to do that. So these guys are doing all that. I mean, in my humble opinion, I'm not an expert in options. I just know enough to place my trades and not to fuck it up. Sorry for the words. Okay, I know enough to do what I need to do. And I don't want to be exposed to more. Why? Because I don't need it. Make sense? I don't need it. I don't need to learn about, I know what an idle condor is. I know about all those options. And they are all a combination of calls and puts. That's it. Combinations. I am buying 2 calls and 2 puts, and I sell calls, I sell puts, and then I buy puts to protect the trade in case price drops. Okay, that's what they do. All these kind of strategies. But so why are they doing that? Because I mean, usually the biggest time frame they are looking at is the daily. That's like, wow, the daily time frame. That's super strong, super big. I shouldn't be looking at it. It's like too big for me. Okay, that's the biggest time frame they look at. So what kind of decision can you make out of this one? Anyone can tell me? Impossible. I mean, that's why they say directional trading is crap. It doesn't work. Come on. You are looking at the daily time frame. That tells you nothing. That tells you nothing. But once you start merging all these candlesticks together in weekly candlesticks, monthly candlesticks, then things start to make change. Well, even in the weekly, this is a bit of a mess. But as per the rules, isn't this a weekly area of demand? Okay? Isn't that? Yeah, it is. 2 ERCs, 2 to 1, monthly uptrend, weekly uptrend, 3 months uptrend, everything an uptrend. A little bit aggressive because of this. You see, look at that. I mean, Adobe and all these stocks that are running so much, they are going to drop like a rock. When? I don't know. But they are going to drop. They always do. When? I don't know. So as long as these levels are being created and you wait for confirmation, then it's okay to go long. Still go long, but don't pretend, okay, I'm going to buy 1 year of time because I believe that Adobe is going to go to heaven and beyond, okay? Infinity and beyond, Buzz Lightyear. No. Can this go to 650? Of course it can. But is that what usually happens after such a strong rally? No, it is not. So do not pretend. If you are trading here, then trade, don't pretend to hold it for ages. So when price reaches that area, get out of it and get your profit. Because it might reverse all the way down at least to the monthly area. Where is my alert set? Right there. Because why? It is a 3 months area of demand and a monthly area of demand nested within it. So that's where my trade is. It is much higher probability than this one. Could price rally from here like 100%? Of course it could. But it is not what usually happens after such a strong rally. So, yeah, Jose, options, it's a bit far away to handle for newbies. But it seems so fascinating. Yes. Should we focus on Forex to begin with and build? Yeah. I mean, it doesn't really matter if you focus on Forex or on stocks, Jose, as long as you are focusing on supply and demand. You can trade Adobe as well. You can trade Tesla. You can trade Facebook like you do with Forex. So how do I do that? So on Adobe, if I wanted to buy the stock, you can do this. Drill the level down a little bit smaller, okay? Or do it like that, or do it like that, okay? As long as you are buying because it is in an uptrend, it's fine. So how much does it cost you to buy Adobe? Well, if you were going to trade, one sec, what happened here? Over there. Adobe, the proximal line is at 450. So with many brokers, you can buy one single share. How much would it cost you? $450. Do you have $450 on your account to buy? Then you can do it. That's simple as that. If you want to buy 100, it's going to cost you $450 multiplied by 100. It's going to cost you $45,000. I'm not doing that. Okay? But you can buy. I mean, if you go to Netflix, where there is a level of demand on the daily, I don't know if it was reached or not, on the daily there. So Netflix, we've got a level of demand over there, something like that, or something like that. Okay? Imagine you draw it like that. Even if you draw it like that, or like that, or like that, it doesn't really matter. 2 to 1 has been reached, the strength of the impulse and all that. Imagine you want to buy that. How much would it cost you to buy one single share of Netflix? $508. Do you have that on your account? You can do it. So you don't necessarily need to trade Forex. The problem with Forex is that most people from the undeveloped worlds, quote unquote, okay, from South Africa, Indonesia, Africa as well, Asia, they don't have enough money to invest. So they've got maybe $500 and they want leverage of 500 to 1. So they can make like $500 into $500,000. So that's why they do Forex, because Forex allows you to do that. You can leverage 500 to 1, 400 to 1. That's why people trade Forex. But once you learn about stocks, I mean, why should I even think about Forex? I've been a Forex trader for years and I haven't placed a trade on a Forex trade for years as well. Once I learn about stocks and ultimately about options, I'm never going back. It's just crazy. I mean, how many opportunities there are. Crazy. Yeah, Brian said, as long as they are not naked, it's Lawamir. Yeah, because as Vladimir said, what about selling puts? I thought it was talking about something related to sex because I read naked. What about selling puts for premium at demand zone? Looks like safe strategy. It's not different strategy as well. Slawomir, you can do that. I mean, you want to sell put here, selling a put, you're going to be given credit for it. How much? Well, let's see. You go to Netflix. Here, let's say you buy a put for, let's say for 22 days. When you sell a put over here, okay, you're going to get like $20.65 or here, between $18, $20, depending on when you buy the put, sell the put, sorry. So you're going to get like, let's say 20 for the sake of simplicity, 20 multiplied by 100, which is a contract. You're going to get $2,000 on your account, a credit, okay? A credit of $2,000. So you have like 20 days, you sell a put here or around there, you're going to get like $2,000 for that trade. So as long as price doesn't hit the strike price, then you're going to keep those $2,000 on your account. But if it starts dropping without protection, you're going to lose a lot of money, a lot, more than $2,000. So that's very risky. So I know that what many people do is that imagine that you want to buy the shares of this stock, Netflix, and this is a super strong level and you want to hold it over long or a long time. So you buy, instead of buying the underlying share, what do? They sell a put. When they sell a put, imagine that you get $2,000 for every contract and you buy 10. So you get $20,000. Okay? So instead of depositing a lot of amount of money to buy the underlying share, which is a lot of money, it would be like 408 multiplied by 100 would be 50,000 more or less for one contract. 10 contracts would be 50,000 plus 500,000. Do you have that money? No, you don't. So when these big investors want to buy lots of shares of a particular stock, they will sell puts to get what? A discount, because they sell a put and they get, let's say, $2,000 per contract. And imagine they sell 1,000 or 10,000 puts. Multiply that. That's a huge amount of money that they are not putting from their own pockets. They are given that money. It's a credit that they receive. So you need to learn what a sell, call, ESL put is. All that. It's like counterintuitive. But once you learn about it, it's really, really great. But that's Netflix. Okay, let me read your questions. Okay, have you ever traded daily entry time frame and options? No, Daimus, no way. I'm not. I'm trading weekly, monthly, 3 months, 12 months, 6 months timeframes. Okay, usually I'm trading on weekly, monthly timeframes. That's what I'm doing. Okay, I'm not interested on the daily. But this one is interesting. Okay, for shorter term type of trading. But Netflix is very expensive. It's very expensive to buy. So people will do lots of those. Why people will not go buy a single call here? Because it's very expensive. Just go here. If you want to buy for a single week, okay, it's going to cost you like, let's say between, depending on how far out of the money it's going to cost you between $1,000 and $1,500, one single contract. So that's a lot of money. I'm using IB, Slawomir. I'm using Thinkorswim for my analysis. I prefer this software. It's way better than Interactive Brokers for analysis. And then I use Interactive Brokers just to place my trade as an execution platform. Monica, question, Alfonso. I'm trying to understand the chart for BA, Boeing. The price is back to the demand. I'm waiting for another lift off from that zone. Just want to get your input on your take on the chart. I believe there's a weekly area of demand like on Airbus. We need a bigger retracement on, I believe. I haven't looked at this one for a couple of weeks. Let me take a look at this. Yeah. So let me clean this. So here, that's where I'm waiting. My alert is down there. So right now, the daily, it's a little bit of a mess. The origin of the move is right there, and right there is a weekly demand level. Why is that a weekly demand level? That's why. Make sense, Monica? Now comes a question. Okay? So, do you think that with this price action on the monthly and the 3 months, Boeing is going to rally all the way up to here? Anybody? Anyone? Yeah, most likely it will. It will. So the thing is, if you've got the money, instead of waiting here, you just buy a lot of time. And that's it. So let's take a look at Boeing. Okay? Boeing. This one is expensive. So let's take a look at it. So imagine that, how long do you think that might take? Well, let's say it might take like it took like 8 months. Let's say 1 year. Okay? 1 year of time. Let's say 2 years. So let's say, how much is it worth it? So 1 year of time, January 2022. Let's go to add the money. One contract is going to cost you $3,900 for 1 year. For 2 years, it's going to cost you like $5,300. So do you have the money? Then you can do it. It's expensive. But there are people that have got a lot of money, and they will say, I know a few, and they say, okay, I've got $100,000 and I'm going to invest it on my favorite stock, and then they will buy Facebook, and they will buy $100,000 on Facebook. As simple as that. So I know quite a few people that do that. Okay, so do you want to do that? Well, you've got the money. You want to have that amount of money locked in a single trade. I don't want to do that. Okay, but that's what will you do. So imagine you've got $1 million, $1 million. Would you do that? Anyone? Yes, you could. Well, the guys that do that have got more than $1 million. So if I had $1 million, I would definitely buy that one. And I would definitely buy lots of the imbalances, the 12 months imbalances. I would have bought a lot of contracts on BP there. I went along on this one. And I would buy a lot of them, and there is a lot of profit potential on BP to rally all the way up to this 3 months area of supply. So I would do but if you don't have enough money, then you are going to buy a small imbalances here, then price rise over there, and then you exit and you wait for the retracement and it never happens, and all that kind of stuff. Okay, but if you've got time, you don't care about it. That's another kind of approach. But if you want a paycheck, then that's not going to work, because you need money on a monthly basis or maybe on a bi-monthly basis to survive. So that's not going to work. But you've got a lot of money, it's very easy, quote unquote, to try and make money using these bigger imbalances. Okay? Make sense? Good. So what I've did last week, I've got an account trading options, and I split the account. And now I've got an account which is called midterm. Okay? And I created another one for long term. And what I'm doing is on the long term, I am placing trades like this and I'm letting them go. I'm buying lips of 2 years, which is the maximum that Interactive Brokers allow me to buy. 2 years of time. And I'm going to let them rally. And I'm going to take the same trade on the midterm and I'm going to exit account, okay? And I'm going to exit at 3 times more or less the risk. That's what I'm doing. Because I can tell you, let me try and see if I can pull up something here on the trades that I'm in, and let me see, one sec, archive, where is it? Okay, this is a screenshot of my performance since June last year, where I started this account. So at the beginning of January 12th, I got a screenshot. It was like 150% profit on that type of account. So what I did is that liquidation value, that's my account is $80,000 worth, more or less. Now it should be like 82, 84 the last week. I split the account, and now I am using like 35, 40 for midterm, and then the other half I'm using for long term. Because once I reach my target, I close my trade, but then it keeps on running, obviously, most of the time. When I don't close the trade, price reverses all the way to the origin of the move. Like this one, I took this one on BP, that one. And when this is coronavirus, this is a reaction. All this coronavirus, this is a reaction that happened on thousands of stocks. And then over there, I should have gotten out because I have made a lot of money. And then I let it go, and then price reversed to the origin of the move. I managed my trade. I didn't have a loss, and then I ended up closing my trade. Maybe I lost some money, not too much, or a break even. I don't remember. I would have to look it up. But what I'm trying to say is that I bought when price was there on March. I bought until January 2021. It was going great, and I thought price was going to go like this. But it didn't. Luckily, I managed my trade. So I believe that I got out probably a break even, or maybe a small loss. I'm not sure. But then it reversed and went down all the way to the origin of the move. And now price is doing the same thing. So from March to June, so to January, it was like 8-9 months of time. And it wasn't enough. I should have purchased more, but I didn't. That's the problem with options, unless you are doing shorter term. Okay. Lars, is it possible to set multiple targets? Yes, you can set as many targets as you want. Marzio, may I ask you questions regarding type of pending order? I'm not speaking of options. In some cases, when price is already inside a supply or demand zone, is it possible to place a stop order at the proximal line instead of leaving the order to be sure that price don't go over the zone? You mean? I'm not understanding you correctly. I mean, you've got like here. You've got this area of demand. Okay, you buy here. Okay, Marcio. Then the stop loss should be rare. So what are you saying then? Price is inside here. and then to place a stop order at the proximal line right there? I'm not understanding. Yeah, use the mic. Maybe Marcio, if you've got a microphone, it would be great. I'm not understanding why you want to place a buy or a stop order there. If you are long here, you're expecting price to rally. I'm confused. I don't understand your question, Marcio. Okay, so that's the beauty of these huge imbalances. And if you score this imbalance, look how strong it is. Super strong. This is COVID-19. Not all of it, the last few months. And then COVID-19 has got an obstacle as huge, as big as a 12 months area of demand. That's pretty awesome. And that's where it stopped. And the same thing for so many other stocks. So if you've got the money and the patience, and you don't need a paycheck, buy here and hold it. If you need a paycheck, obviously you can't hold it for long because you need that money to keep on buying other assets. Okay? Good. So, any other questions about this one or any others? Okay? Any other? Okay, good. So this one, for example, this is a German stock. I had it here. So we've got 12 months area of demand, 6 months area of demand. This one is pretty unclear. So what do we have? This was posted on the community. It's still trying to play out, okay? This is a brand new area of demand created with a bullish engulfing pattern as confluence, 12 months area of demand, 6 months area of demand. And like this, you're going to see hundreds of stocks. If you take a look at another Gemma one stock, I took along on this one, on BOSS, and it's like I want to add more if price retraces over here. Why did I take this trade? Look at this. 12 months area of demand. The monthly is getting out of alignment. New weekly area of demand. And we've got 3 months losing steam after a very strong bearish impulse with bigger time frame areas of demand in control. So it doesn't really matter which asset, which country, which change you use. They play out. Sometimes they won't, obviously. But there is a lot of profit potential for Hugo Boss, which is a German clothing company. They have lots of shops here in Europe. I don't know about the US. I don't think they will. But in Europe, it is very well known, Hugo Boss. Okay? And again, the bigger imbalances. Does this mean that you're going to have to wait? Adrian, please explain again why you prefer stocks to Forex. Currently, I only trade Forex. It is very simple. Very simple. Adrian, how many Forex cross pairs are there that you can trade? Just give me a number. It doesn't need to be exact. Anybody can tell. Okay? Can say. Adrian, over there. 20. Let's say like 20 volatile with a lot of liquidity, with decent spreads, and the rollovers are not very expensive. Okay? 20. How many stocks do you think there are that can be traded with a lot of liquidity? Thousands. Thousands of them. So that's the answer. It's not that Forex doesn't work or not. It's that you are forced, as a Forex trader, you are forced to trade a smaller and smaller time frames. Why? Because if you use the bigger time frames and you are trading dollar versus the Turkish lira, the rollovers, if you go long on the dollar, then the rollovers are going to kill the trade unless the price moves so very fast in your direction. The interest is going to, kill your trade. But with stocks, it doesn't really matter. And what happens with those 20 or 30 cross pairs? That if, let's say, 20% of those cross pairs are made of euro, and the euro is consolidating, then you're going to have you're going to go in trouble. Why? Because you're going to be trading consolidation, and we know what happens when price is consolidating. Supply is created, eliminated, then demand is created, and eliminate it. It's very tricky unless they are very strong. So you are forced to trade. Most people trade the 1 hour time frames and then the 5 minute time frames, 50 minute, because first of all, most forex traders don't have enough money and they use a high leverage. So if they don't have enough money, they have to trade smaller time frames. And since there are not so many trades, not so many cross pairs that have enough liquidity with decent spreads and rollover interest, then you're going to be forced trading intraday and short term. But that doesn't happen with stocks because there are thousands of stocks, uncorrelated stocks, different sectors and industry, the oil industry, oil and gas, then the clothing, the airspace, the airlines, the IT sector, the pharmaceutical sector. I mean, that's so many. And all of them are trending. So again, why do I prefer stocks? Isn't that obvious? Make sense, Adrian? It is obvious. It's obvious. So imagine you are going out with your friends to have a drink, have dinner, have fun. You are single and you are flirting. Where do you prefer to go? To a discotheque or to a pub where there are no girls, or to a place where there are hundreds of girl parties all over? You go to where the women are. I mean, there are hundreds of women there. Okay, let's go there to the party. I'm not going to the pub at the corner where I've been there like 100 times, and maybe from time to time there is a nice woman popping up. Okay, no, I'm going to the place where there's so many. But same thing with forex and stocks. I mean, I prefer stocks because there are thousands of them. Okay, that you can trade. I'm tracking about maybe 700 or 800 stocks with a lot of liquidity that are optionable, but because not all the stocks are optionable. Okay, not all of them. I wanted to trade this one today, but I couldn't. This one. Okay, this is a new stock, Chindata, strong area of demand on the monthly and all that. I wanted to trade it, but I couldn't. Why? Let me show you why. Marcio, you send me a picture. Okay, I'm gonna take a look at it. But let me go to CD, Chindata Group Holdings. And you're gonna know why I didn't go long. Well, I've got time. I can buy until August, only 8 months, which is fine. Okay. Don't you think that in 8 months price could be up there? Yes, enough time. Okay. But the thing is this, that, well, now things have changed. Oh my God. Well, this is not the right example because now the spread is not that big. So I wanted to buy here, and now the spread, the difference, the mid is like $100 difference. So it would be a 50. But today it was, this morning when I look at it, when I wanted to buy, there was 300 difference here. That was, I'm not sure, but it was like 300. Okay, and so if the difference is so huge, then it's a problem because when you close and if the spread is so big, imagine that when you're going to close when price is up there, let's say, and the bid price is, let's say, 30. Imagine 30, and then the ask price is, let's say, 20. So the difference would be $7. That means that when you want to close it, you have to close it at mid price, more or less. Between 30 and 20 would be like maybe 16. So you would be losing $400 on the trade. Makes sense? Because you are not closing at 20. You see the ask price over there, but you're not going to close at the ask price. You're going to close always at mid price. So if the difference between the bid and the ask is huge, then if you are making, let's say, $2,000, you look at the unrealized profit on your broker and say, oh, wow, $2,000. I'm going to close it right now. And then you close it and you get 1,500. The rest is gone with a spread. That's the problem. And I wanted to show this example, but it is not the best example because right now, when the market has opened, now the spreads are like more stabilized. So $1 of spread is fine, but that one, but I'm late because I was thinking of going long there. It already went up like 8% or 9%, and I'm not in this trade because of that. But that happens, okay? But it doesn't really matter. There are hundreds of, if I go here to stock, this is my stock list. Look how many I've got. You see? Crazy. And there are many more that are not optionable that you can buy. And this is only in America. Then you add Germany, France, Spain. No, not, I am Spanish, but stocks in Spain, they are, not very liquid. But in Italy, there are quite a few. You can go to Canada as well, to Australia, to Japan, to China. Crazy, okay? But only with the American ones, it's more than enough. They are the most liquid in the world. So why would I be focused on trading 20 Forex cross pair when I have 2,000 stocks? I don't care about that. So I trade stocks because of that. And I can trade ETFs. There are many ETFs that can be traded. And I can't. So there are even more. So let me read what this guy said. Like I had said, even when my weeklies get overrun, I can't imagine what happens to the 4-hour time frames. Just my humble opinion. Yeah, that's it. But once you buy time, doesn't really matter, Brian, as you know. Monica, any reason why you choose 3 months, monthly, weekly? If may ask, well, they are bigger time frames, and they hold, the bigger the time frame, Monica, the higher its reliability. So, and just go over, this list over here, very high time frame in control. This is a list of stocks that have 3 months, 6 months, or 12 months area of demand in control, and they are playing out. And now I'm gonna scroll down, and you can tell me how many stocks there are. Obviously, you can't count them, but it's in the order of hundreds, isn't it? All of them. This year, okay? This year was particular, very different, because we had COVID-19. And COVID-19 was the catalyzer that allowed price to retrace to those imbalances. Usually it takes longer for price to retrace, but the COVID-19 just price snapped back to the origin of the move, and it's played out really, really nicely. So this is a list of all those stocks. So why should I care trading the euro dollar with a monthly average supply against the bullish impulses? Why should I care? Let me take a look at the webinars list. Why should I care? Thinking of going short at the daily average supply against bullish impulses in the monthly. This is against the latest impulses. This is not demand yet. This is supply. We can go against it. Okay. with new areas of demand. Okay. But if I see this on a stock, what do you think I'm going to do? Monica, Mohani, or anyone? What do you think I'm going to do if I see this on a stock? Anyone? Oliver says, sell. No. Nothing. I'm going to do nothing. I'm not going to sell. Put it aside. Skip it. Like Jose said, and Anwar, and Ali. I'm doing nothing. I'm not interested. The month is not uptrending. Why should I do that? I don't care. Can price drop down there? Of course it can. I don't care. I want the monthly in an uptrend, the 3 months in an uptrend. I want all those time frames in an uptrend. And I've got a list here, okay, with hundreds of them doing exactly that. So why should I? I go, for example, to Estée Lauder, okay? 12 months up, monthly average amount over there. Why should I care selling here on the weekly? I don't care. I'm looking to go long, so I've got, let's go to, I don't know, all this one over here. Facebook is not the best option, but I don't know. Let's say Federal Express, okay? Federal Express, what would you do on Federal Express right now? What would you do? Anyone? Sell? No. 6 months, area of demand being created. 3 months, area of demand. We've got bullish impulse not able to consolidate away. Again, rules, no longs within it. What is imbalance? Right there and right there. So that's where I've got my alerts set. Only longs. Only longs. And there's one thing that I'm going to do for the new website, among many other things that I will announce. There will be many changes. And one of them is that the lessons will only be dealing with trend scenarios. Counter trend and all that is going to be ruled out. No lessons about that. Only trend trading. The trade is the asset is not trading, trending. Sorry, skip it. Can you go against it? Okay, good for you. But we are not discussing them. Why? Because we want to rule out the low probability scenarios. We want to trade with the trend. Well, if you rule out the counter trend scenarios on Forex, then you are in trouble because you are going to have to focus on 1 minute time frames. So Forex is more difficult to trade. It's, it works obviously, but it's more difficult because there is no trending market except a few ones like Euro versus Norwegian Krone, the dollar versus Turkish Lira, and just 2-3 more. That's it. Okay. Trend is our friend. Okay. Adrian, do you do any live training sessions or one-on-one for newbies? Yes, I do one-on-one for newbies. For those that are struggling, you can contact me, Adrian, and we can even plan trades, whatever you want. We can do that. No problem with that. Brian Oliver, sentiment is super important with stocks, so bull market, equal weight and buy, especially with COVID supply. Yeah, the COVID supply he's referring to is the supply zones that have already been eliminated, created with the fear of COVID. And all of them most of them have been eliminated, not all of them. Okay. As you may remember, when I was discussing the S&P, I was saying down there when this area of demand was almost reached, and also NASDAQ was saying now we can go. This is COVID. This is COVID supply. This is COVID on March 2020, and we're saying now we can go long on S&P, and that's what we want to do, going long and going long. So maybe there will be areas of demand that are created and there is no retracement. Once you see strong bullish price action and you can have the equity to buy and hold, just buy and hold it. Okay. Okay, good. I think all the questions have been answered. So, yeah, Diego, tell me. Yep. You mean? Yeah, but well, you could use the 4 months. The thing is that 3 months is a very important number. Why? Why do you think? Why 3 months is important? Anybody can tell? Yeah, you can read the chart. Quarterly earnings. So quarterly earnings, 3 months, 6 months, same thing. Quarterly earnings, 12 months, same thing. Yearly earnings, quarterly earnings. So that's when I guess that many long-term investors position themselves. After the end of the quarter, they know what is the result and they will say, okay, now I can buy and hold even longer. So that's very important, in my humble opinion. Also the option expirations, like Slawomir said, quarterly reports, it's very important. So that's why. And even if there was no such a reason, okay, Diego, just look. You can take a screenshot. I've been sharing all this with you all over months, okay? All this very high time framing control, okay? All this. So this proves that it doesn't really matter if there are earnings or not. if the sequence, the fractal distance between time frames is 3, 4, 5, or 10. It just shows that the imbalances created on the quarterly, 6 months, and yearly charts play out so nicely, that you don't really need to understand. I don't know for sure, I don't care, as long as it works, and that's all I need to know. It works. Makes sense? It works. And as you can see in the community, in the channels, I update those imbalances months. I draw them months before, sometimes years before price retraces to them. And what happens? The majority of them play out. So do you have the capital to buy and hold? That's the problem. So you have to drill it down to smaller time frames to try to get a paycheck at the end of the month. That's the problem. Because if you traded these huge imbalances, like for example Momo, I am long on Momo. Why am I long on Momo? Isn't that enough? So that was a trade on the daily here. It tried to retrace. It's a pity. But the thing is that if you are trying to, that trade is the perfect analogy, and I will answer to you now, Damian and Slawomir, okay? This is the perfect analogy for the target thing that I explained before, okay? Trying to trade that daily imbalance is like trying to hit the center of the target every single time. So what are the odds of missing the center of the target? Anyone, Diego included? Very high. So instead of focusing on the daily, I forget about the daily. Okay, I forget about the daily. And I look at the bigger time frames. 12 months area of demand. 6 months area of demand. 3 months area of demand probably as well. Not that good, but on the 6 months, 3 months, they are great. These bearish impulse here on the monthly here did not, okay, accomplish anything because demand is here. Okay? So this is not the supply. So we expect that to be eliminated. There is a lot of profit margin, at least to that price area, where probably there will be a reaction. So there is a lot of profit margin. So I just bought 2 years of time. And now, am I going to look at the daily to enter again? I don't care. I just bought my Momo, and I share with you this potential area of demand for those trading the daily. If you are buying the stock with stop loss and all that, then the line shares, then yes, you have to wait and then all that. Okay, but if you are buying time, who cares about that? Do you see the logic behind it? If I buy 2 years of time, why should I care about entering at the right spot? Why should I care when I buy 2 years of time? Why should I care of hitting the center of the target? I just want to hit the target. And where is the target? The target is like a big thing at 100 meters of me, and I'm shooting with a cannon. You are throwing an arrow, okay, and you want to hit the center. I'm shooting with a cannon with a ball that weighs maybe 25 kilos. I don't care. I'm not going to only hit the target. I'm going to destroy the target. Make sense? I'm going to destroy the target. And that's the thing. So that's the kind of mindset that I believe we all should have. Okay? I don't want to be perfect. I don't want to hit the center of the target every single time, on every single occasion. I just want to hit the bloody target. Anywhere, but hit it. And that's it. The best way of doing that, in my humble opinion, correct me if I am wrong, is instead of thinking of buying the underlying shares, you just buy time to hold on the position as long as it takes until your target is reached. Make sense? That's what I'm doing, and that's the beauty of buying options. As simple as that. You don't need to buy spreads, iron condors, broken butterflies, or pregnant butterflies. I don't care if the butterfly is pregnant or he's got a broken wing. Okay? I just want to buy a simple vanilla call. As how much money do I have? How much can I allow myself to buy? Well, on Momo, let's take a look on Momo. This is not as simple as I'm explaining. There are many variables. Like on Momo, if I want to buy 2 years of time, it's going to cost you between $465, depending on where you buy, okay, and $700. Don't you think that's nice? I mean, it's not too expensive. Let's say to go here in the middle, $600. Well, the middle price would be like maybe $590, $600. So you buy you spend $600 with the expectancy of making quite a lot of money. The thing is, okay, I'm going to have $600 for how long here? Well, I didn't buy $600. I bought, I don't know how many contracts I purchased for Momo, but it were maybe 5 or 6. I don't remember very well. But there is a high probability that price is going to rally above this weekly area of supply and reach at least this area over there, at least. But so far, so good, okay? We are having the weekly highs broken already. We're having new areas of demand. We're having a brand new bullish engulfing pattern on the monthly, new one being created on the 3 months, and it's only 1 month of time. So that's pretty good, okay? Because we still have 2 more months. This could happen on the 3 months. Make sense? So there is a lot of, the beauty of options is just crazy. But it is not as simple as I am explaining, okay? It is not as simple as that. There are a lot of variables and you can make so many mistakes. Even with price being above the entry price, you're gonna lose, okay? Many times. And that will not, if I buy here on Forex and price is there, I'm winning. But if I buy here, I buy options there, I might be there and I'm losing money. So that's like, what? Why? So it's complex, okay? It's not easy to understand. Well, once you understand it, it's like, wow, Forex? Come on. I don't want that. But it works, both of them. Okay, any other? Okay, so all of this here, I wanted to buy Match.com here. You know this company, Match.com, a dating company. We've got a weekly average amount over there. It's really trying to play out. Today, bullish engulfing pattern. But my alert is on the monthly. So it didn't reach that area. But it's already playing out. Okay, it went up today like, how much? Like 12%, which is great. So it's so many, okay? So many. Nectar, I'm long on this one as well. On Nectar, why am I long on this one? Isn't it this obvious? Nectar? 6 months, 12 months area of demand. What about this price action? Anyone? What do you think about this price action over here? What do you think is going to happen? Trash. I mean, very bad. Losing momentum. So there is a lot of probability, high probability that price is going to reach that monthly area supply. Okay? And that will allow Nectar to rally like 73% from $18 to $32 more or less. That's a lot. That's a lot. Let me read, Oliver. How long did it take for you to transition to stock? What measures did you have to meet in order to convince yourself to move? Did you use demo accounts? So if so, is the same you show already? What do you mean if it is the same you show already, Oliver? It took me, in order to move to these stocks, it took me quite a long time. Because I needed to understand, because I was trading the 4-hour and daily imbalances, and when you look at the daily on Nectar, well, in this case, we've got an area of demand over there and all that. How long is long? More than a year. But I mean, let me explain to you, Oliver. It took me more than a year because when I transitioned to stocks, I transitioned to stock options. And I needed to understand how to adapt the strategy, which option strategy to trade. When you look for information on options, you're gonna find all those kind of strategies with iron condors, also funky names and all that, fancy names. Sorry, and I knew I didn't want to do that. Okay, so until I reviewed a lot of information about options, learned about it, learned the basics, understood how it worked and all that, and I started to place live trades, but not taking too much risk and all that. It took me more than a year to make the transition, but I was developing the way of trading options using supply and demand and all that. So it took me longer than than expected. But if you transition from Forex to options, it might take you maybe 6 to 9 months to gain some kind of understanding of how it works and all that. If you are taught the exact things that you need to know, otherwise you're going to be lost with so much information, because on the internet no one is buying calls and puts. They say that option strategy is useless. No one is trading with the trend. They are all taking trades without even looking at the charts. Just a mathematical formulas that are telling you, okay, I'm going to buy a spread far out of the money, like 30% or 80 to 85% out of the money. High probability of not being hit, the strike price. And that's what they do. So I didn't want to do that. So it took me some time. But once I learned about it, forget about anything else. I mean, this is beautiful. Beautiful. That's the word. So let me read your questions. Options, you have a great slow one. Okay. Are you doing demo account? I already replied to that. Thank you for saying I'm sorry, but I have to leave. Okay, good. Marcio. Investopedia as well. Good. Yeah. Yeah, Investopedia, just the basics is just fine. Just fine. Tasty Trade as well. You got a very good course on options. But they do the basics, and then like after 3-4 chapters, they start talking about spreads and all that. It's crazy because they do that. And obviously, Tasty Trade is also a broker. So what do you think a broker is going to teach you? If you buy a long call, how many commissions are they going to get? Okay, long call. You buy a call. You're going to get what? 1 commission to pay. 1 commission, isn't it? So 1 commission. In Interactive Brokers, you pay to enter and then to exit, to sell the call to close. Okay? So you would be paying 2 commissions on Interactive Brokers. On brokers like Tasty Trade, I believe you only pay for only 1 commission. Just to exit and to enter and exit is the same commission. But if you are trading like a spread, you are paying on Interactive Brokers, okay, 2 commissions, exit and entry. If you are buying an iron condor, you are paying 8 commissions on Interactive Brokers on Tasty Trades. So what do you think all brokers are going to promote? What kind of trades are they going to promote? The option strategies. They are going to promote those that gain them the most commissions. As simple as that. So they're going to write all kind of books about the spreads and the beauty of trading without looking at the charts, just mathematical formula, the standard 1 standard deviation, 2 standard deviations, like this. Okay, out of the money, at the money, and all that. Well, that's so many things, but you really don't need to pay attention to that. Okay, you can trade. Yes, you can trade stock without options. Yeah, and no problem, Anwar. Thank you for being there. So, which one? Any other questions? Which one should we look at now? Let's take a look at another one. We've got 10 more minutes. Don't forget about the watch list question. What was the question? Damien, can you remind me? How to create a watch list on TradingView. That's what you're asking. Well, I mean, go there, create a new list, give it a name, and that's it. And then you start adding stocks to it. That's how you create them. As simple as that. But I guess you are referring to which stocks you should be adding. And you? That depends on... No, he's not asking, so I don't know what he's asking. My question was actually, do you do it manually or do you have an algo? I do it manually. Manually, always. Damien, nothing can beat human mind and manual work. I want to verify all that. Okay? It's like this list of stocks that I am sharing with you. This is my Google Sheet application, okay? And these are the stocks that I'm watching, okay? As you can see, the distance bar, okay? All these prices added there on the proximal line are added manually by me. I don't have any algorithm that will add the number there. I do that manually. There's nothing that can beat human mind, like I said, and the understanding of how price action moves. I mean, you can create the most complex algorithm. It might work, obviously. It's going to cost you hundreds of thousands of dollars. Why do it if I have my brain? I still have my brain functioning. So, and not only that, it gives me, every time I draw an imbalance manually, I type in the proximal line manually. Don't forget about it, I am gaining experience. If I create a software that does all the hard work, all the dirty job for me, then I am not creating any experience. I'm not creating any neuronal corrections in my brain. I'm not creating patterns and habits that will allow me to recognize price action, when to trade and when not to trade, because the algo is doing it for me. So a few years ago, I was doing that, creating all kinds of indicators to locate imbalances, drawing trend lines and all that. And then, no way. I was wasting my time. I just can do the analysis on any stock that you tell me in instantly, a second. You tell me now a stock and I will tell you yes, no here. I mean, I don't need to do any kind of chain analysis because I know randomly, I will. Why? Because I've been doing this for years. Make sense, Damian? Or anyone? Yes, Diego, tell me. I mean, you just have to, you have to add it or to the Excel spreadsheet or the Google spreadsheet in order to have that. And you have to enter that number manually. There's no other way. There's not. Yeah, I mean, it would be great that there was a script that went over all these stocks and detected the proximal line and the distal lines. Maybe in the future, it will be possible. Right now, I contacted a couple of programmers and they told me that's just impossible right now. But maybe in the future, it will. And when that happens, it's going to make my life much easier. Why? Because I'm just going to run the script and it's going to go over all this in a snap of in a moment. And it will it will add the proximal and distal lines, because right now I'm not adding the distal line. Why? Because it's a lot of time. I mean, you need to add the proximal and the distal. So I would like to know if the distal line has been broken. That means that the imbalance has been eliminated, and then I should be looking for another one. But that's too much time typing both the proximal and distal lines. So I'm happy having only the proximal line right now. But in the future, I will be able to do many more things. One of the things that I will be able to do probably shortly, if I find the right person to do it, is that I have access to historical data. Okay? So I will be able to read historical data with some ideas that I have, and I will be able to detect if I've got price rallying, reacting positively, and creating maybe new 2 ERCs, engulfing patterns, and all that. So imagine the power of that. When I have the imbalance in control, and then right now here, when another column, I have like saying rallied already 15%, and there is a weekly and a monthly bullish engulfing pattern. Imagine that. It's like, wow, let's go for it, go long. So that's what I'm trying to make, but that's going to take some time and a lot of thinking. Okay? Yeah. For drawing the engulfing patterns. Well, I don't recommend any of them. I had to create my own because the one that they are using is not perfect. So I had to create my own, and I am sharing it with you in the community. There is a link to, when you go here to the object tree, you're going to see that the engulfing pattern here is called this. And this is what the engulfing pattern from TradingView doesn't have, this percentage. And this percentage changes everything, okay? Because sometimes you're gonna get like engulfing patterns like that, okay? On Forex, engulfing patterns are perfect, okay? This is the open maybe, and this is the open as well, or this is the close. So they are like to the pip. But on stocks, you're gonna get something like that. You're gonna get something like that. Okay, so that 30% is like the deviation from the open and the close from the previous candle. Okay, so if you add the TradingView indicator, you're gonna have like maybe 30-40% less engulfing patterns than with the one that I have created. Yeah. So on Forex, like Oliver said, they are very clean. But on stocks, we have a lot of orphan candles. So let's like this one. On Forex, you're not going to see this on Forex. You're not going to see something like that. It's just not possible. Something like that, either. It's not, very, very rare. That will mean that there is a gap on the weekend, very huge gap on the weekend. And gaps on Forex are very rare because there is a lot of liquidity. Okay, good. Glad that you see that, Oliver. So,
Sorry, I didn't understand.
Come on. This Google Voice, my phone is next to me, it's in silence, and it detected that it says something, and he said, my mobile said, sorry, I didn't understand. Crazy. Okay, yeah. So, any other thing? Any other questions? It's been 2 hours already, 10 p.m.
You used to do some trips, gatherings, and all that. Once the situation normalizes, is this something that we will do again?
You mean the meetups, the gathering together? Yeah, that's something I want to keep on doing. But with the COVID-19 and probably COVID-20 and 21, it's gonna be very difficult. It's gonna be very, very, very difficult. This year it's gonna be impossible. I don't think the COVID-19 pandemic will be solved this year. This year is gonna be like 2020 or even worse, regardless of the vaccines. It's chaos. So this year is gonna be like Oliver said, it's just a write-off. Forget about this year. So in Spain, it's just crazy. In Spain, I just cannot drive my car from the city I live to the next city, which is like 10 kilometers away from me. Okay? But then tourists can get a plane and come to my city. So it's like, what? You can come to Marbella where I live from Norway, but I cannot go to the city nearby 10 kilometers away from me. It's like, it's nuts. It's crazy. So I don't know. It's going to be very, very difficult to right now believe that the pandemic is even worse than on the first wave in Spain and mostly in the whole world. So, and the vaccines are not going to change that. So this year, it's not going to be possible to organize the meetup like I did in the past in London, Singapore, in Tenerife Island, Spain. It's going to be very difficult. 2020, like Monica said, probably. It will depend on the virus, but, well, the virus unfortunately has killed lots of people, but I'm sure many others are very happy because it's giving them, they are earning a lot of money. So it allowed me to take lots of trades. So I can't complain. I would be complaining if some relative or family of mine would have died from this bloody virus. But I know it's been hard and it's going to continue to be very, very hard throughout this year, for sure, no matter what the bloody politicians say. I mean, it's very easy to be a politician and say, hey, lockdown, stay at home without earning a single dollar every single month. But they are earning, like in Spain, 7,000, 8,000, 10,000 euros to do nothing and stay at home. And you tell the population, the citizens, stay at home, earn no money, no bread to eat, nothing to eat, because I am at home earning 8,000, 10,000 euros a month. It's nuts, crazy. But it's everywhere the same. But okay, so I believe that's everything for today. We've been 2 hours discussing lots of things, even basics on options. And hopefully now you will understand why I am trading stocks and why I'm trading the bigger time frames. It's very easy to understand, I believe. After you review the video, you will understand why. I mean, you already know, but if you were not in this session, you will understand why I'm doing that. It's just so many opportunities that I rule out Forex a long time ago because of that. Okay. Thanks a lot, Monica. And thanks everyone. Said as well. Have a good night and we'll be in touch. Whatever you need, just send me an email or tag me in the community and I will help you. Okay? Thanks a lot. Have a good night and bye-bye.